G'day guys, welcome to the channel. My name's Tim, and on today's episode we'll be taking an analytical, non-biased look at what Bitcoin is doing. Now we've just had about 6 days of going up in green, so we are anticipating that there will be some sort of pullback at the moment. Now what we're not sure about is whether the pullback will be, something that brings us all the way down, or whether the pullback will be something that we bounce off and then continue the way up. So we don't know that just yet. We'll have to see what plays out in the coming days. So it's a really fascinating time. But I do want to point out a few things to look at though. So first of all, this blue shaded line, we've looked at this several times. This is the 50-day moving average. And you can see in a bull market, we pretty much bounce off it all the way up to this point until we crash through it. And then we find our way, underneath it. And we've stayed underneath it this entire time. And this is the very first point when we've actually broken out of the 50-day moving average. Now, if you look back over previous cycles with Bitcoin, I've got the 2013 peaks here. I've got the 2017 peak here. I've got the 2019 peak. And this is actually an old image. I drew this about 3 weeks ago, but we'll come back to this. What you can see is the blue shaded line being the 50-day moving average. On every occasion, we go above it and below it, above it and below it. So this below, above, below, and this time we actually just kissed it, and then we stayed below. That was fairly bearish at that point. 2019, we're below it, we go above it, below it, above it. 2017, again, below it, above it, below it, above it, below it. And this time around, we started above it, we went below it. We're kind of due. We're due to go above the 50-day moving average. And you can see here, this was back in early July. We had that double bottom, and I was anticipating that we would go up, but we never did. We actually kind of got close, and then we fell back down to about this point, and now we've gone up. Okay, so that's something to keep an eye on. Now, the other thing I noticed just looking back over these charts is we seem to follow this ABCDE pattern where we end up bottoming out. Can you see that? So go ABCDE and we bottomed. 2013 peak 2, ABCDE, we bottomed. Let's go 2017, ABCDE, we bottomed. 2019, ABCDE, we bottomed. 2021, ABC. So I was anticipating that we should go up for a D. And I just thought that one there, that's not quite it's just too small. It just seemed like a bit of a fake out. It wasn't quite, in hindsight looking back, I didn't really count that little breakout as part of this wave. So it's really A, B, C. So I'm anticipating this is part of a D wave, and then we could, again, come back under the 50-day moving average on the E wave. So let's draw that in, how that would look. So if we go over here and select Elliott wave, A, B, C, D, E, it would be something like this. A, B, C, that was technically the bottom, that wick there. D, wherever we end up here, and let's say this is as high as we go. We might go higher, but let's just say for the moment we go here. And then E would probably bottom. If I had to pick a point, I'd probably pick a point about here. Now, the reason for this point is because we have a little bit of support. Now, it's only a small amount. We've got a few days of support that was built up on the way up over there. But it's also on this trend line. And you can see we are tracking towards this downward trend line. And we have seen that before as well in previous cycles. We tend to bounce off the falling trend line. So there's a bit of confluence that that's where we may end up if we do top out at this point. Okay, so that's one particular scenario. But there is also the bullish scenario where we do a V-shaped recovery, and that's the V, and we end up doing what I had drawn in before, which is, let's go 1, 2, 3, 4, 5, where it's like a 1, 2, 3, 4, 5, that type of thing. And I have shown you this before, but Amazon did that back in the dot-com bubble. So we can see here they had a V-shaped recovery right here after a 59% drop, which is very similar to what Bitcoin has had also, and they ended up doing a double top. So, and a double top is actually a quite a quite a bearish reversal indicator, and in that case, it did drop down to 94%. So we've covered some of this in other videos, but that, yeah, I think most people would agree that if we had a double top at 64K, that's not necessarily a bad thing. There's plenty of gains to be made between now and then. I just think it's a little bit early to call the bullish scenario just yet. And the reason for that is that we're still following this ABCD, this pattern, and on every other bull run, we have done, once we've crashed through the 50-day MA and gone above it and below it and above it, we've always crashed down to, you know, a local bottom. It's always happened, you know, every single occasion. Look at these Ds. So the D goes above the 50-day moving average. This point we just kissed it. This one went above it a little bit. This one went above it for that. You know, 2017 looks very similar actually. If we, you know, were below the 50-day MA until we got to the D wave, and then we went below it again to a similar point to where we were on the E wave there. So it is quite possible that we do that again. So we've got to be ready for that scenario, but we also have to be ready for the bullish scenario. I just think that there is less evidence apart from 6 strong days in a row. Apart from that, which is pretty impressive, there's still so much evidence. We've got a downtrending line that we've been following for several months. This is the first time that we've got above the 50-day moving average, and it is expected that we do get above it because it's happened on every other cycle. But whenever we get above it on those other cycles, we then go below it again, and the average stays in the middle somewhere. You know, it stays in the middle like that. We go above it, and then we go below it. We go above it and below it again. So that is still what I am anticipating in terms of probabilities. But there is a percentage. There is a percentage chance, and I think it's a lower percentage chance than us going down, but there is a percentage chance that we do, you know, go up. So we have to be ready for that as well. Now, how do we deal with this when it comes to investing? You know, it's so uncertain, and some people would say, you know, it's all about risk. You got to risk it all. Risk it all. The more risk, the more reward. But there are a lot of famous investors that talk about this topic. Charlie Munger was one that would say that every investment is either a yes, no, or too difficult. And I would probably class where we are now as too difficult. If we get some sort of confirmation that we're going up, then that becomes a yes. And if it turns around and we come back down, then, you know, we know where we're headed as well. But you don't necessarily need to always risk it all. You know, there are other scenarios when it comes to investing. So anyway, I hope you enjoyed that video. So this was an unbiased look at what the charts are showing. You know, it looks very positive in the short term. The last week, we are due for some sort of pullback, and we'll have to see how far that pullback occurs, whether it's small or whether it's large. I'd say the probabilities are that it's a larger pullback and we come down to these levels, but there is a small percentage, maybe, you know, 25-30% chance that we do keep increasing. And then once we've got some sort of confirmation, that's when you know, you can go harder with a particular investment. But this is not financial advice, purely entertainment only. So anyway, I hope you enjoyed that video, and until next time, cheers.